One of the other things that kind of comes to mind is this clarity to only trade the 4 primary trade types when you're learning or approaching VWAP for the first time. I think a lot of traders are eager to use any and every possible support or resistance level they see with a VWAP or DV band or a multi-day VWAP as a potential trade signal. Your job is to find quality, clean examples that are screaming at you, hey, don't I look like a bounce off the VWAP? Hey, everything's going the right direction, right? We've got market support or market directional support. We've got the VWAP slope aligned appropriately. We're respecting the deviation bands. We're getting up into the fast lane. Everything seems like it's going in your favor. When traders start to stray off the reservation a little bit, trading reversionarily, let's say from the deviation band back inward. So an example would be a trader who says, look, it topped out right here. I'm going to go short. And I would say to them, well, what type of trade is that? What trade number is that? I say, it's none. I just sort of feel like it's topping out. You have to ask yourself, well, why did I, Zach, go to so much trouble of talking about the slope of the volume weighted average price and the fact that we're on one side of the VWAP, finding containment, respect at that deviation band? What are all these signals we're getting of a consistent trend, and why are we fighting that? So really it comes down to our 3-step process. I had said this before, but now we're kind of doing how we analyze setups, right? How we analyze any chart. Is there a prevailing market-wide trend that I need to be observing? Is there either in this sector or, as I said, broad market like SPY or NASDAQ, a prevailing 1-day or 5-day trend? And is my trade in agreement with that? That's as simple as sailing with the wind at your back, right? We want to be in agreement with the broader market. Secondly, is this chart respecting VWAP or abiding by the principles of VWAP? Is it screaming at me, hey, you know what's going on here. You've seen this movie before, right? And then finally, does the chart offer limited risk for substantial potential reward relative to VWAP? So just to repeat those very quickly, broad market, is the chart respecting VWAP? And then can I structure a trade with limited risk? Those are the things we want to be asking ourselves over and over again. It should build familiarity and kind of confidence, having seen that same type of movie over and over, seeing 100 trending VWAP charts with decent slope and nice respect of the deviation band, so that we become pretty familiar over time with what a market that's likely to continue persisting in the fast lane will look like, versus what might count as like a plot twist in the movie, so to speak. What's interesting about this chart in particular is the contrast between, and you guys know where I'm going with this, counter trend and trend days on back-to-back days. So here we have Friday's trading and Monday's trading. And early today, we did get a bit of support, or excuse me, a bit of consolidation stuck in between the plus and minus 1 deviation band. Relatively flat volume weighted average price. So in mid-morning here, it looked like it was stable and going sideways, not really a significant trend. But after it couldn't break higher into the upper fast lane here, look at how it snapped through the volume weighted average price, through the lower fast lane, violated the prior low of day, and then slope picked up pretty significantly. You can actually see here, we had decent downslope early in the morning. It briefly kind of paused there and went back flat as we attempted to breach above VWAP, but that was very short-lived. When we look at our routine for kind of analyzing what's going on here with the market, what's going on here with this trade setup, whether the type 3 short rejection up here, the type 4 short cross of the VWAP, or the type 2 short shifting into the fast lane as it broke lower and the slope started picking up. Let's think about our kind of 3-step process very quickly. Is there a broad market trend either in this stock or in, as we said, SPY in this case, right? SPY, SP 500. We already know that the market kind of gapped up and was developing higher throughout most of the day. So we could say it had gapped up and then traded up briefly before consolidating. This was very much weaker than the market. So the fact that it was making progress to the downside while the market was going up is actually kind of favorable to us. It was bucking the trend of the market, but because it was significant relative underperformance relative to what SPY was doing at the time. If we had to decipher some sort of an overarching trend for this stock, I would not say it's to the upside. I would not say it's to the downside. If anything, I would say it's relatively sideways for those prior days. But that's what makes this kind of sideways consolidation so tasty that we broke out and down from. That's what made that kind of intraday trade a bit of a multi-day trade assessment as well. Is this chart respecting the core elements of VWAP, or is it abiding by the principles of VWAP? Well, I would argue absolutely. It looks like we're kind of stuck within the deviation bands on that prior day. And then again, it appears that we're held by the same principles. So when those principles are violated or broken, that represents a significant shifting or tipping point within the character of that stock. And then finally, does the chart offer limited risk for substantial potential of reward? So here's where we say to ourselves, if I were to go short, either on a rejection of that deviation band, it's very aggressive, on a cross of the VWAP, it's a little less aggressive, or on a breakdown into the fast lane, this is probably the trade I'd be looking at, hoping to take, because there's a little more confirmation there. We don't have to be the bold guy trying to short above the VWAP, hoping for a turnaround. Here we've got a decent amount of confirmation, and we're just starting to break down out of the multi-day range. What would our stop have been? So let's zoom in and kind of take a quick glance at this. Let's say our entry had been here. Notice I'm not trying to get a perfect or pristine entry at the high of this candle. I'm not saying that we would have reacted immediately at the deviation band. Let's say we began observing more selling. Our entry is roughly 1905. And imagine we gave it all the way up to the half deviation mark, which is coincidentally about that prior swing high there. Let's call that 1912. So roughly a 7-cent stop on a $19 stock. Doing some quick math here, that's like a little under 0.5%, right, of risk for real expansion potential, both with the VWAP moving nicely and the deviation bands getting bigger, reflecting that increased volatility and therefore increased potential for us to trade. Now again, all we need to know is if this is my initial risk, my initial entry, am I really expecting at least 2-to-1 in my favor? It's kind of generously drawn, but you see what I mean. Am I expecting a real material move down? And again, we go back to what's the overarching picture? It's relatively weak relative to the market. Has it tried to respect the VWAP or DEV bands? And the answer is yes. It could not get up into the fast lane. It could not live above the VWAP either. And then can I structure a trade with limited risk and decent potential of reward? Now, holding this trade, especially in through this kind of flat low that appears to happen, looks like it's coming up to the deviation band, I would not fault anyone for taking at least part of the trade off in and around here. You'll notice I kind of acknowledge these very human moments of just wanting to lock in profits because we've all been there. I don't expect or anticipate everyone to hold every winning trade until the closing bell. You know, when we say what are the tipping points at which we might take a trade, you'll notice that I really am only ever referring to the 1 deviation band, the -1 deviation band, or the VWAP. I am not talking about the 2 deviation bands. We are never really deciding anything about a trade based on the 2 deviation bands. Even when traders will say, well, Zach, but what if it makes a low? Couldn't you exit the trade in here? The problem is that we also would have been fooled into exiting here and here and here and here and here on the way down. Part of the challenge of trading is letting a trade move in your favor, go sideways, and make you think, oh no, I'm going to lose all my money. When in fact, the people on the other side of the trade are the ones who are about to get shellacked. The challenge is reading the broad picture of what the chart can tell you. We had a strongly declining VWAP all day. We know VWAP has inertia about it. We know we got into the fast lane and we broke down out of a multi-day range. A lot of reasons why we should stay with this trade for as long as we can. You know, think about this too. You're not an investigator. You're not here to forensically analyze every single element of the chart. You're here to develop a good enough understanding of what's occurred so far to make a quick read on where you think that market is headed next, and where you think that chart is headed next. It's going to be very helpful when you're sitting down to try and make a multi-day trade happen, or you're trying to analyze using multi-day VWAP. I always give myself about a minute to try to apply the right VWAPs before I've read whether or not this chart looks viable. It's possible that I'll take a trade and then continue to develop the multi-day picture over the coming minutes after I've already entered, if it's a very timely opportunity and I don't think I've got a lot of time to wait, because I can always get out of the trade minutes later for not a lot of loss if I decide, well, wait a minute, there's a multi-day VWAP overhead that I hadn't seen previously. Yeah, okay, I'm gonna answer that question broadly, yes. Broadly, yes. Do I always take trades that are in agreement with the market? No. There have been times that I see a stock that looks like absolute crap, and I'd like to short it, even though the market's going sideways or higher. However, I know that there's a prevailing condition for the market that if money is flowing into SPY, for example, the likelihood that any stock within that universe is going to float higher or see some passive money flowing into it as well. Yeah, absolutely, that's a thing. So I do watch SPY for a broad market direction, duh. However, the way in which I decide whether I'm going to be long or short is through adding individual positions long or short. So let's say it's a very, very long looking day. I'll probably take 3 or 4 long trades and maybe try and find 1 short. If it's more of a choppy sideways day, 50-50, right? 2 or 3 trades of each. And obviously only rarely, but when it is a real directional breakout day, would I be exclusively, let's say, long. That doesn't mean I hedge my trades. It just simply means I'm still open to the idea that there might be a decent short setting up that I can profit from and inherently kind of hedge myself. Yeah. Sometimes the slow grinding nature towards a VWAP or a deviation band can actually be better. So an example would be something that has taken its time throughout the day trying to get up towards VWAP. This is then the opportunity where you would expect the market to really aggressively resume its selling. And in the event it doesn't, if it pops above VWAP, then you're dealing with a very, very different sort of style of market, something that there weren't sellers waiting in the wings to hit it back at the average price, but rather something that, you know, they've been building or accumulating throughout the day. I think with a high volume candle, so I'm going to kind of draw over top of this, let's say something just spikes up to VWAP. The problem with that is you don't know if there's going to be continuation through based on whatever the reason why we're experiencing that high volume is, or if we're going to get a snapback rejection. I think during a strong trend, I would prefer the high volume candles, like a snap up to VWAP and then a resumption of selling. During no slope, I would expect and prefer kind of a grindier, slowly moving back up towards the VWAP. Yeah. I would almost say certainly the immediate or violent rejection is what we're hoping for. You know, if we think about the psychology that's going on with a VWAP test of any kind, so again, we'll just draw a basic VWAP and we're going to assume that price is coming down into it, and then people are going to buy it up from that VWAP. If that happens, that means that people are willing to pay the average price for the day because they anticipate that it's going to be worth significantly more later in the day. If they did not believe that, they would be waiting for a discount below VWAP where they would be able to buy it, right? If they believed that the end of day price was going to be, let's say, here at the VWAP, well, then wouldn't they want to purchase it far below VWAP to get an advantageous entry? So we want to see a violent reaction when price comes to VWAP or a deviation band, because that presents a good opportunity for institutional traders to try to get aboard at a good price. If they're not present and if they're not excited about that opportunity, you know, we're not going to be the ones to turn the market around. We're not going to be able to buy 400,000 shares of a large cap stock, right? So yeah, absolutely. Seeing a base form at the VWAP, let me draw a separate example. I'll do it over here. Assuming, let's say we come down into VWAP and test it multiple times. The problem I have with that is, why didn't it launch? Why didn't it launch? Why didn't it get up into the fast lane? Why are buyers not excited about this, right? And the answer is, it's probably setting up to break and go lower for the remainder of the day. Otherwise, it would have taken any of these opportunities. They would have said, hey, I'm buying at the average. That's a good discount, right? A discount relative to where it's going to end up at the end of the day. Yeah, absolutely. I wouldn't be discouraged from taking the trade, but I definitely would be cautious about, you know, the opportunity for, it was Restoration Hardware. What a nice move we had over the last couple days. Very clean and clear directional trend. So, you know, an example would be something like this. We had a prior high of day. The market found some support at volume weighted average price and then started breaking up into the fast lane. Are you not going to take this circled trade? We just had earnings, clearly had successful earnings, gapped up a couple percent and traded up significantly. Actually made a bit of a flag and then broke higher out of that. So, you know, flag and then broke up and out of the flag. Look at how much we would have missed out on had we just been cautious about that prior day's high. You know, another thing to think about, especially when we have nice slope on the VWAP, ask yourself, why is the market getting back to the high of day? Why would someone buy it up to the high of day in an upsloping VWAP, other than if they thought it was going higher still? It's unlikely that they're buying it up to the high of day only so that they can sell it back down from the high, right? Nobody's trying to push price up to be able to exit the rest of their position at a better price. The market is too big and too broad, and we do not control it, right? So it's far better to just react with what your position is at that time rather than, and obviously market manipulation is illegal in any case, but it just doesn't make sense that people would want to push a stock near its prior high other than if there was anticipation or excitement about that continued directional, you know, behavior, right? Yeah, and I kind of would have anticipated at least a pullback to the VWAP before it maybe resumed getting back in the fast lane later in the day. However, you know, think about this. It gapped up and did not sell off. It traded higher and could only sell back to the VWAP, right? It's only coming back just a little bit. Found support at the VWAP, came back to the fast lane. Found support at the fast lane, found support at the fast lane. When we have that kind of inertia, when everyone is on effectively one side of the trade, I know the temptation is, well, I'll be on the other side of the trade. You know, they're rocking the boat too heavily to that one side. I'll be on the other side. I'm, you know, happy to zig when the market is zagging. But shouldn't we actually kind of recognize that there are going to be days where the trend is the actual answer. We shouldn't overthink it. So again, think about this. If you were short this stock and they reported good earnings, we gapped up, we traded up, we pulled back to VWAP and traded up still, we pulled back to the D band and traded up still, at what point are you going to say, man, I'm really on the wrong side of the trade? People are willing to acquire this stock at nearly any price. So yeah, I would have been a little nervous that it would have broken down through the deviation bands. But again, until it meaningfully downshifts from the fast into the slow lane, we have no reason to believe we should do anything differently. We should let the wind continue blowing in the direction it has been blowing. You know, this is going to surprise you guys a lot. The only way in which I really use volume is the general magnitude. I just want to see whether there is decent buying pressure or selling pressure. I'm not forensically analyzing the volume or volume levels. What I found is that because VWAP incorporates volume quite nicely, I don't have to do a lot of analysis on VWAP or on volume specifically. I kind of get to let the calculation incorporate volume. And again, you guys understand this with a volume weighted average price. What it does is it applies a dynamic amount of weight or significance to each candle according to how much volume was traded on that candle versus the total day's volume. So a proportionate amount of volume. I just feel like that already incorporates any higher or lower volume dynamic. I mean, I think it really all comes down to slope. This is frequent retort of mine, but what we're really trying to detect is, are people moving enough money through the market in order to move or adjust the average price? Because if they're not serious players, they're not seriously moving the market is oscillating around an average. If the average is moving, enough money is flowing in one direction or another to be changing the average. And that means there is some intent, some intention, some desire, some demand. You know, how much in this, I'm going to draw like the initial VWAP surge and then it flattens out. You know, if we're looking at a market that has rip-roaring success, and then, sorry, I got to draw this with the deviation bands too. I should have thought about this better. Something like that. If it falters and then breaks back down through, do we believe that this is going to present a viable type 1 trade for us and then resume its trend later in the day? Or are we more likely to think, you know, this might float down here, this might oscillate and go sideways? I mean, there's a lot of things it could do, but it's probably not going to bounce. I really do think it comes back to slope. If the slope has completely flattened out by the time we retrace back to it, yeah, it is probably stuck sideways. And that is a full downshift effect kind of day where you had your initial run up, that's the pink, and then it kind of falters and becomes the choppy sideways light blue. If there is still slope, so let's say it occurs during this rising period still, yeah, I could really anticipate that a type 1 is more likely to succeed. I mean, basically what we're saying is that slope is conducive to trending behavior.